Bitcoin explodes.
Amazon rules.
CEOs revolt.
And investors cheer.
Here are the top 7 money stories in 2017.
Number 7, brick and mortar's retail apocalypse. A record 6,700 plus locations shuttered in 2017. A stunning list of bankruptcies. More than 70,000 retail jobs lost. But online sales are soaring. Walmart's pivot to e-commerce pays off. Online sales skyrocketed. And Amazon, the king of digital shopping, saw its stock price cross $1,000 a share, making CEO Jeff Bezos the richest man in the world. Amazon has so much cash, it actually bought a brick and mortar chain, bringing us to our next story.
Number 6, mega mergers. Amazon's $13 billion purchase of Whole Foods. It was one of the splashiest deals of the year, and in true Amazon style, the retail juggernaut immediately dropped prices. Verizon, closed its purchase of Yahoo, and as the year came to an end, CVS plans to buy Aetna. It's an eye-popping $69 billion. If approved, it will rank as the largest healthcare merger in history. It all relies on the regulators. Will they sign off on these deals? Just before Thanksgiving, the Justice Department sued to block AT&T's purchase of Time Warner, parent company of CNN. And that's causing uncertainty for future deals and could put a chill on M&A next year.
Number 5, the Bitcoin craze. The virtual currency started the year below $1,000. Then a speculative frenzy took Bitcoin from $6,000 to $16,000 in less than a month, driving it all an expectation that this speculative investment will someday be mainstream. And the rally sparking a get-rich-quick fever in retail investors. So is Bitcoin a bubble in made-up internet money or a profound shift to a viable digital currency? Nobody knows for sure, so buyer beware.
And so to number 4, your data that's under attack. In September, credit reporting agency Equifax disclosed a colossal breach on a monumental scale. The data of 143 million Americans, nearly half the country, had been exposed. Chief Executive Richard Smith resigned, although he still got a tongue lashing from lawmakers in the US.
Equifax did a terrible job of protecting our data.
The lesson for corporate America: hacks are a threat to your brand. Prioritize cybersecurity or be prepared to pay the price.
Number 3, chief executives bail on the Trump administration. The CEO president made a big show of bringing business leaders to the White House, but his hand-picked jobs and manufacturing councils started to unravel and then eventually imploded. In January, several high-profile CEOs criticized Trump's travel ban. In June, Tesla's Elon Musk and Disney's Bob Iger both quit the group after the administration withdrew from the Paris Climate Accord. Then came Charlottesville. One CEO after the next resigned from the councils, until the president had no choice but to disband them altogether.
Just in, 2 of the president's CEO groups for jobs now totally gone, disbanding.
It was a stunning reversal considering the euphoria among many business leaders following Trump's election.
Number 2, the most sweeping tax reform in decades. It will touch nearly every American citizen, and it's billed as a middle-class tax cut.
This is going to cost me a fortune, this thing. Believe me. This is not good for me.
The bigger relief goes to those who need it most.
The middle class are the biggest winners in the Senate tax plan.
The government's own analysis tells a different story. It finds the rich and corporations benefit the most at a cost of $1 trillion added to the deficit. Republicans insist tax cuts will ignite explosive economic growth, benefiting everyone.
The conference report is adopted without objection. The motion to reconsider is laid upon the table.
Trump administration and the Republican Congress on the brink of their first major legislative victory of 2017.
It's the largest tax cut in the history of our country, and reform, but tax cut.
And number 1, the Trump bump takes off.
20,000. It's a historic moment.
We've gone right through 20, 21, 22,000. Just another day at work.
All right, we do have breaking news. Look at that number right there, 24,000.
It seemed nothing could stop this rally. Not a growing nuclear threat from North Korea, not the Russia investigation, not the nomination of a new Federal Reserve chair. President Trump delights in praising the market's rise.
We have a stock market that has hit record highs 81 times since our election victory.
And he often touts the strong economy.
Total unemployment is now at a 17-year low. Think of that. Not bad.
Every president takes credit for a booming economy. But cheering on the stock market, that's risky. Just think about it. After all, what goes up, sometimes, perhaps usually, in the fullness of time, might go down. And the second strongest bull market in history could be overdue for a serious pullback. So, the question now, will it happen in 2018? Or will the bulls continue to run?